How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for November 27th, 2018. Here's a snapshot of the positions being held by the institutions as of this date. And so, like we always do, let's take a look at gold first. Now, in this latest report, the EURUSD report sent out to members, I went into some detail outlining what the big picture theme here is across all the markets. And we can see a lot of profit taking on positions being held by the institutions is what is taking place right now. Okay, we've known this with respect to gold since August, and even before then. As we were getting really aggressive with shorts, it came to a point where they had to take profits on their positions, and that's exactly what we've seen them do ever since here. All right, and so since then, profit taking causing price to go up, reacted from the weekly area of supply, a push down, and now we got some consolidation. And during that consolidation phase, we have a slight decrease in shorts and a slight decrease in longs. So I don't think anything different then the profit taking on shorts is going to be what is going to continue in the weeks to come, especially leading into the holidays and into the new year. I think there's a very good chance we get this push upwards, breaking through that weekly area of supply and all the way up to the area up here. And so you can see there hasn't been a focus on adding any long positions at this point. But that's okay, because we typically see this take place. They focus on taking profits on one position, and then when they're done, then they focus on going on in the opposite direction. I think there's still a good chance that we'll see them increasing their long exposure within the weeks and probably a couple months. Okay. So now we take a look at oil. So we've known that they've been taking profits on their positions ever since price was up here. Big drop, as I had laid out, and we can see that since here, very aggressive territory down to less aggressive territory, and we see shorts, very cooled off territory, and becoming a little bit more aggressive. So I think we're at a stage right now where we're going to see some sort of a push to the upside, and I'm watching to see if this is going to continue becoming stronger and stronger. I think this is what's going to be happening. If you take a look here, you'll see 163 well above the average of 127, okay, and 511 well below the average of 600. So I think we're going to get a push up, and then more shorts are going to be added by the institutions in the months to come. Alright, so now we take a look at the US dollar. We see shorts are very cooled off and longs are somewhat aggressive still. A small increase in longs as price rallied up from a daily demand zone, and still very aggressive in terms of their overall exposure. 87% geared to the long side, very overexposed. So it's within reason to see some profit taking up here and a push to the downside on the dollar. Now when we take a look at the Aussie, we see big decreases over the last 3 weeks. From 20 to 18 to 15 now to 12 in terms of their long positions, but we also see that they've been taking profits on those shorts, right? 98 now down to 66, quite a significant drop. But if you notice, you'll see that since the 98 and the 66, short exposure has actually increased, and that's due to the big drop in longs. Okay, so they're maintaining the market, holding the stability of the market, and down at these lows so they can take profits on those shorts. Very likely we get a push up. That's what I've been saying for quite some time, since this weekly area has already been tested. We're testing deeper into it now, looking for a push upwards here on the Aussie. Now we look at the US CAD, and so there's an increase in longs and a slight increase in shorts as price was just pushing upwards right towards that underside of the weekly ascending trend line. So slightly increasing, but we're just coming out of cooled off territory. Same thing with the shorts. Bottom line is, if you look here, it's neutral, meaning we really shouldn't be taking any trades on this pair. So that's exactly what I'm doing, just sitting on the sidelines for the time being. US Swiss franc I noted in the EURUSDJPY report something very interesting with respect to the weekly chart, and it should go without it should go with you should take it with some great respect, because what I've found is that we are reaching areas where we should be getting a major sell-off here. Okay, now we've looked at the US dollar and we can see that we're at limits where we would typically see a sell-off. I think it was up in the high 80s, overexposed on the long side, so we should be expecting some sort of sell-off with that. And so when you look at this one, we're seeing the same thing. We're seeing numbers reminiscent of big sell-offs by the institutions. But this is not necessarily going to happen this week or next week. I think leading into the Christmas holidays and into the new year is when we're going to see price fall over like this and head down. Okay, so watching that, but very interesting. We've seen this happen in the past, and it looks like that's exactly what's taking place right now. Euro US dollar, we see a decrease in longs from 157 to 149, and pretty much shorts doing nothing, and that's as price was responding to some daily supply and pushing lower. So not much else to see in terms of that. We know that they are shifting their bias from long to short. Still too early to tell if it's going to do this. I think there's a good chance it's going to do this, simply because of when you look at the other markets, the dollar, the other US pairs, this is what is looking like it's going to take shape. Alright, now we look at the pound, still selling off on those short positions that they were holding here, slightly declining into 77k, from 140 down to 77, only almost half their positions since the summer. And if you look at longs, still cooled off, because once again they are focusing on taking profits on shorts. Afterwards, if they want to push price higher, then they will focus on longs. And right now they're not doing that. They're just focusing on offloading those short positions that they've been holding. US dollar Japanese yen, another interesting one. We're at limits where we would typically see a sell-off. We have back in early October 170,000 right here, and down to 140. So this whole phase is profit taking on longs. As you can see, they've been decreasing shorts, but that's to help maintain stability of the market up at these highs so that they can take profits on their longs. So we're seeing the same theme. The US dollar has that theme of profit taking, the US Swiss franc, the US dollar Japanese yen, all with the same theme. So leading into the new year, we should see this spill over and collapse. How far down is the question. Now we have the Kiwi, and we see that there has been massive profit taking on the short positions ever since mid-October, early October, from 49,000 now down to 36, and shorts or longs remaining cooled off. Not much to see here. Alright, still with the short bias, but I think what's going to take place is a push even higher before they eventually push it down like that. Okay, and that's it. The Kiwi was the last one. So that's your CFTC report for November 27, 2018. Once again, we got to be careful leading towards the holidays, because the institutions right now are not focused on accumulating positions. All they're focused on is taking profits on positions that they've been holding. So we got to wait for the dust to settle, and then when they start accumulating a position, that's when we want to attack. Alright, ladies and gents, hope this was helpful for you. And until next time, have yourself a great week. Take care.